Hi there, welcome to Kneppyinvests. I've been trading Clinuvel on and off over the past few years, maybe up to 5-6 years or so. And it wasn't until recently, a few months ago, where I decided I've got to stop trading this company's shares and just buy a parcel and keep a parcel within my portfolio for the long term. For full disclosure purposes, I am a shareholder of this company. It's in my long-term buy and hold portfolio, and I have no intention of selling those shares at all, well, at least for the next 2 decades, because there is significant potential for this company over that time frame. It would not surprise me at all to see this company as one of the best quality and biggest companies on the ASX in 2 decades' time. A lot of things do have to happen in that period for that to come to fruition, but all I'm talking about is the potential, and I don't want to miss out on that potential. And that's why I have this company in my long-term buy and hold portfolio. Now, we'll be talking about the September quarter results in this video. And for Clinuvel, the June quarter and September quarter tends to be their best quarters. I'll talk about that or the reasons why later in this video. And just by the title of this video, you can see they did produce $11 million of operating cash flow in this one quarter alone. And one of the reasons I really like companies like Clinuvel, the space that they're in, is they are world leaders in what they do, and because they're world leaders in what they do and there's very little competitors, you'll see fairly high margins in the product they do sell. And because they have high margins, any increase in revenue, most of that will fall down to the bottom line. So even though they only produced $17 million in cash receipts for the one quarter, the majority of that fell to the bottom line, and that's why they're operating cash flow positive, $11 million. Some companies in the world, particularly, say, construction companies, services companies, produce a lot of cash receipts, but because they have very low margins, the majority of that does not fall to the bottom line. So you can see construction companies having revenue of almost $1 billion, but yet cash receipts or profit in the $5 to $10 million range, and you'll see those companies valued even less than what Clinuvel is right now. Okay, I'm rambling on a little bit, so let's get stuck into the video. But before we talk about what Clinuvel actually does and then look at the September quarter Appendix 4C, I was actually surprised that Clinuvel is still issuing quarterly reports. I thought ASX would have told them they don't have to do it anymore. And then I just found right at the end of the commentary in the September quarter Appendix 4C, this little statement. Although the company is no longer obligated under ASX listing rules to publish quarterly cash flow results, it elects to continue to do so to keep its global investors updated regularly. I found that at the end of the Appendix 4C, and this fascinated me because the majority of companies who get told by the ASX that they don't have to publish any more of their quarterly cash flow reports to the market probably have a significant sigh of relief, because I could imagine that issuing these quarterly cash flow results, these Appendix 4Cs or 5Bs, is a bit onerous on the staff of these companies, particularly those companies who don't have much staff. And I think they're happy not to do it anymore. They're glad not to do it anymore. And Clinuvel have gone the complete opposite way. They understand that these quarterly cash flow reports do help us as investors to see how a company is performing. There are some experts, some professionals out there who don't understand why companies have to report quarterly or even half yearly. They prefer companies just to report once a year, and they can keep the market updated by just issuing random comments every now and again how the company is performing. I do like regular financial updates from a company, at least half yearly, but I do like Appendix 4Cs and 5Bs simply because we can see how these smaller companies are performing on a quarterly basis. And I do like the fact that America all American companies have to do quarterly reporting, even though I do think at times it can be a little bit of a burden on some companies. So that's just my thoughts, and it's very good to see that Clinuvel's management's interests are aligned with shareholders' interests. They understand that there are some investors out there who want regular updates, and Clinuvel have decided to maintain issuing these quarterly cash flow reports. Clinuvel is a biopharmaceutical company who have a drug, if you believe it or not, can help those people who are photosensitive to light overcome the pain they do experience when they are exposed to significant amounts of light. And that drug is called Seasonality. I think it is an implant that is put into a person maybe twice a year, if I remember correctly. And there is a bit of seasonality to Clinuvel's cash receipts. You'll definitely be able to see it when I show you the cash receipts history. This company was founded in 1987 and listed on the ASX in 2001. The CEO is Dr. Philip Wolgen. He's been the CEO since 2005. I have heard him speak on a couple of occasions, and I do find him quite impressive. And the very fact that he's been a CEO for 16 years and he's progressed Clinuvel from where they were back then to where they are now tells us that this CEO is an important CEO and a very successful CEO in what they do. Two of the biggest shareholders in the company, well, not the biggest shareholders, but significant shareholders in this company, is the Sovereign Bank of Norway and BlackRock. Both of those funds have, or fund managers have 1% stake in this company. And the market cap of Clinuvel at a share price of $38.61, which was the share price at the close of trading on Friday the 30th, 29th of October, is $1.9 billion, and the ticker code for this company is CUV. Before we have a look at Clinuvel's quarterly reports for September of this year, I just wanted to compare the financial year 21 results to what this company experienced in 2016, 5 years ago. I do this with every single company. Sometimes I look at different time frames. And the reason I do this with every single company is I want to see everything growing through time. I want to see revenue growing, cash flow growing, profit after tax growing. And if all those are growing, more than likely you will see the valuation in the share price growth or growing in the company as well. And if the share price hasn't grown when all those financial metrics have grown, that's either telling you the company was overvalued 5 years ago, or it could be undervalued right now. For Clinuvel, everything is moving in the right direction. Revenue's gone from $7 million to $48 million. That's almost a 7-fold increase in revenue over a 5-year period. Operating cash flow has gone from negative $5 million to positive $19.3 million, and profit's gone from negative $3 million to positive $24.7 million. Everything's growing at a fairly good rate, and everything's positive now. That's an absolute tick in my book for Clinuvel. Not only that, net cash is up at $80 million. So no debt for this company, and that's another big tick. I like companies not to have too much debt, or preferably to be net cash. And the share price right now at $38.61 has increased almost a 10-bagger from 2016, where the share price was $4.32. If we take a look at some of the valuation metrics, and this is calculated with the share price at $40, PE ratio is at 80, and EV to operating cash flows at 94. They are fairly high. And that's the one thing with Clinuvel. The valuation of the company at the current time is quite stretched. And the main reason it is stretched is because the market does expect significant growth in this company over the next few years, next 5 years. And it's pricing that growth already in the company. So you do have to be mindful of that right now with Clinuvel. I have made one recent change, the way I compare quarter results in companies in these videos. I had been comparing the most recent quarter to the quarter we just had, so comparing the September quarter to the June quarter. And instead what I'm doing now is comparing last year's September quarter to this year's September quarter. So I've transitioned from comparing quarter to quarter, and now we'll be comparing year to year. And there's one reason I'm doing that. And the main reason I'm doing that is because there are some businesses like Clinuvel who do see a bit of seasonality in their business. And you'll be able to see that seasonality when we look at the cash receipts for this company. So it's best to compare year to year instead of quarter to quarter in those type of companies. For Clinuvel, if we go back to September 2020, they received $12 million of receipts and were operational cash flow positive by $7.9 million. And because they are highly operational cash flow positive and they don't spend a lot of money in financing and investing activities, much of that fell to the bottom line, and they increased their cash on hand by $6.1 million to $72.8 million. One of the reasons why the cash didn't increase quite as much as the cash flow was because they paid a dividend, a $1.2 million dividend to their shareholders. You might hear me sometimes say, I'm not the biggest fan of dividends because it can suppress growth, it can suppress innovation. But for companies like Clinuvel, who are producing a lot of cash, are still doing research and development, I think issuing a very small dividend is not a bad thing. That's what CSL does, and they can continue to grow, or they do continue to grow. And one of the attractive things about me in regards to these sort of companies is that dividend will grow through time. So instead of buying into Telstra or the banks with a 5% dividend yield, you can buy into Clinuvel right now with a very low dividend yield. And then in 5 to 10 years, that dividend yield could be 10, 15%, because if the business improves, the financial state of this company improves, that dividend is going to continue to grow through time. And eventually, the dividend yield you get from this company will be significantly more than the dividend you get from those income companies like the banks and Telstra. And that's what's attractive about these sort of growth companies. Now let's see how Clinuvel performed in the most recent September quarter. Everything is going up. Receipts and customers up to $18 million, or just shy of $18 million, and operating cash flow positive by $11.6 million. So this company has improved when you compare the September quarter 2020 to the September quarter 2021. A lot of cash flow coming into the business. But again, the September quarter tends to be this company's best performing quarter, and it will be obvious when you look at the cash receipts in the next slide. And again, because this company doesn't spend much money in financing or investing activities, most of that cash flow fell to the bottom line, and the cash on hand increased by over $10 million to $93.4 million. And again, they issued another dividend. Seems like the dividend remained about neutral, $1.2 million. So they have almost $100 million of cash. And that's another attractive thing about this company is they are increasing their cash on hand. And that means management have much more flexibility about what they do in the future, how they deal with that cash. They could decide to keep that cash on hand for potential acquisition in the future, or they can increase their research and development, maybe develop more products. Maybe they even do a share buyback or increase their dividends. A lot of flexibility for management in how they deal with that cash. And in some ways, it is one of the most important decisions management at Clinuvel will have to make over the next few years. I've already mentioned numerous times that there is a bit of seasonality to Clinuvel, and hopefully that is quite apparent in this slide, looking at the cash receipts history going back to June quarter 2013. Yes, I've been following this company for almost 8 years, and when I started following this company, receipts for Clinuvel were well less than $1 million. In fact, they remained well less than $1 million up until 2016. That's when we started to see cash receipts really grow. But if we just look at the June and September quarters for this company, that's where we do see a peak in receipts. And if we just focus on those peak in receipts from 2017 to 2021, the peak in those receipts keep going up. And that's the most important thing when it comes to Clinuvel that the trend is up with this company. The other thing they did discuss recently, I think it maybe was in the last quarter, is they want to try to smooth out the lumpiness in receipts, try to get more business for the winter months in the Northern Hemisphere so they don't have these massive spikes in receipts during the summer and then the receipts in the winter fall away. And I'm not sure exactly what those plans are to smooth out the lumpiness, but there is something this company's management is aware of. But in saying that, it doesn't really matter because the cash flow in the summer months is quite significant for this business. I've already mentioned that Clinuvel was almost a 10-bagger over the past 5 years. So I just decided to show you the 5-year chart, weekly chart for Clinuvel. And 5 years ago, actually more than 5 years ago, if you go back to the start of 2016, the share price of Clinuvel was around $2, and it's increased to $38.61 at the end of closing on October 29. So it's more than a 10-bagger since the start of 2016. And that's actually when we did see a bit of breakout in the share price at $2 at the start of 2016, and we have seen the share price go up ever since then. If you were following that company, that at that point in time, that would have been the ideal point when we saw that breakout in the share price. And in fact, the share price increased from $2 all the way to a top of about $39 towards the middle of 2019. And then we did see the share price pull back a fair bit from the middle of 2019 to the COVID-19 financial panic, when the share price fell all the way down to 13. But recently, and definitely since the start of 2021, we've seen another breakout in Clinuvel's share price. I think the reason share price has broken out is that the business has continued to grow. And I do think a lot of investors, a lot of fund managers have seen some value in this company, particularly if they continue to grow at a significant rate over the next few decades. If we look at the daily chart for the last 15 months for Clinuvel, we saw a period of time between June last year to the end of February this year where the share price was just going sideways, consolidating, and then we saw a breakout in the share price in March of this year, and that breakout coincided with a little bit of a peak in volume, and we saw the share price rise from about $21 to about $30, and then share price consolidated again for about 5 months, trading between about, we'll say about $27 and $31. Then we saw another breakout towards the end of August, and again that breakout coincided with even higher volume, and that breakout moved the share price from about $29 to a peak of $44. And again, potentially we're going to see another period where the share price consolidates, goes sideways. And this is a good time to take possibly another position in this company if you are excited about their future as we wait out for the next potential breakout in the share price. It could happen in a few months. It could happen 1 year from now. And I have no reason to sell out of this company just yet because it is growing. Share price is almost at an all-time high. The all-time high is around $44. So it's not far removed from that. We won't see much resistance if the share price remains around these levels. And so a lot of things to be excited about Clinuvel right now. Probably the only thing you might have hesitation about buying into this company is just the valuation. Might seem a little bit stretched, particularly if you don't have high conviction about this company. And a lot of our investing is all about conviction. If you have less or more conviction than I do, then that's the reason why you might or might not buy into a company. And the whole reason I do this channel is to share ideas with you, and you can take these ideas and do whatever you want with them. That's all I have for this September quarterly cash flow report for Clinuvel, even though the ASX have told them they don't have to issue these quarterly updates anymore. Clinuvel management have decided they want to keep us updated with how the company is performing. If you have any questions about this company or any other company on the ASX, please leave a comment, a question, your thoughts in the comment section of this video. Otherwise, I'm not a financial expert, financial consultant, whatever you want to call it. So if you do need some financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.